We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up BTC USD. We are in the 12-month time frame. Price action, last candle to the right-hand side is a bullish green candle, working its way up from a support. So we do have current price sitting at 26837.00. So if price action works its way up, it's headed within the second last candle until we get to break out to the top side of that candle or to the bottom side. So price action can reach up to the highest high of that candle before tagging that area of that high. Market can make it to at least the midpoint of that second to last candle, and if that market draws back and can reverse and tag the second to last candle body, which would be near the numbers of 1655 3.57. So if price pushes up, it can head to the next level of 31,398.67. If not, it can tag that area just identified as a reversal and come back down. So far we can see that we do have an area of structure of higher highs, and we have price action area structure of lower lows, and we can see that price action has just broken that midpoint line in that area. With the third to last candle, it identified as a spike up to the high that lost momentum and pushed that market down. So when that market did come down, pushed up from the beginning of the market with the first candle, we did receive some consolidation with the first few candles in the market. The market pushed up to a high of the midpoint, came back down to retest, and which drew out the pattern for that first, second leg. So when that market pushed up with the third to last candle, lost momentum with the wick, market came back down, created that fourth leg, tagged that area of the midpoint, as we can see, and then price action trying to lift off that area and push up for that W formation. If not, price action can be denied at the midpoint or anywhere below the midpoint if it follows up with a bearish red candle that can push that market down. If so, then market's coming from a pattern at the high from the third to last candle in the market, which identified that long wick up to the high, which identify the pattern of the come up in green for that first leg, coming down in red for the second leg. Price action will be the retest near that area, the midpoint of the second last candle, and market can come down and create that structure of that double top. But so far we do know that we are within the second to last candle, so we are receiving the consolidation, and the market could be pushing up further because we do know that price action did second last candle came back to retest the midpoint. Price action coming out that midpoint of that structure. Walking down to the 6-month time frame, let's take a look at what's going on. So price action 6-month time frame reading as a bullish green candle, engulfing the previous second last candle being a bearish red candle, spike up to the high that's retesting the third last candle of the market. So the market's still reading the same as we've seen before, just a little more detailed. We see multiple spikes up this time on the 6-month time frame compared to that one spike up on the 12-month time frame. Second last candle also identified as a retest before that market came back down. So it's something going on in this area. So it could be identified as a break and retest or some type of W formation, because when that market did spike up to the high, came back down, it created that first leg, second leg, because market did push up, did lose momentum, and that next market was created with the price action. So it could be on some type of third leg, but definitely we'll see some type of consolidation. I think it's going to be an incline double bottom as we walk down that time frame, or maybe it just identifies a break and retest, which would be on the third leg, and the third leg identifying as a first, second, third, and we're going to see if that market's going to push up as we walk down that time frame if it's on that third leg of the double bottom. 3-month time frame, we're still receiving that bullish green candle, so we have some type of consolidation with the second last candle, third last candle in the market, which creates the consolidation on the midpoint line, and price action trying to push off that line. We don't see a retest yet. We're going to see if it follows up with a retest. And if we look over to the left, we can see that double top. So we have a double top to the left hand side, so identifying that when the market did spike up to the high, this double top did push that market back to that midpoint. So we can see that first, second, third, and market pushed down for that fourth leg, bearish red candles, and market's trying to work its way out of that area. Working our way to the monthly time frame. So price action monthly time frame reading as a bullish green candle. So I did say we probably on like a third leg or breaking retest. So let's see what we on right now. So price action reading as a bullish green candle, spiked down to a low. So it's a break and retest in that area. Second last candle is consolidation. So let's read the market from the left hand side. So when that market came down into that area fully, we do have that first leg because we're looking for the red and green touch to the black line. So we do have that first leg. Market pushed up for the second, and the retest is with the second to last candle for sure. Price action did spike that low for another retest before gaining some momentum for that push, which pushed price into that current price at 26,882.00. So we did receive the break in a retest. So market pushed up, retest, and we received a push with the price action. Headed down to the weekly time frame. So price action on the weekly time frame reading as a bullish green candle. And we can see the retest on the weekly time frame is identifying as a double retest. That's why we see that double bottom. And that spike down to a low on an earlier time frame, or on the monthly. We did see a single bottom of red and green touching the bottom, but now we see a double bottom, so it's more detailed for the first, second, third, fourth. And we have that market broke up above that red zone, broke out of it, came back to return, and created that double bottom formation that pushed that market up to current price for that first, second, third, fourth. So we do have another break of the previous side. So we're going to see if that market is going to push up further, but we're still looking for a retest that still happened for that market to push up. So market could still push up and more follow up with green candles. And by the time at least the midpoint between the black SR line and the top of that zone, which price is near, if market breaks this area somewhere a little bit below that line, if market pushes above that, we're looking for the retest for the market to push up further, unless that market just identify bullish green candles and push up all the way to the top. Walking down to the daily time frame. So price action daily time frame reading as a bullish green candle, so engulfing the previous side. So the second, third, fourth to last candle in the market is identifying it could have dropped the market for a reversal, but didn't happen. So this is the areas where we can be a little cautious while that market's pushing up further. So as the market broke the previous, let's put a SR line. So the market broke the previous top of that fourth to last candle. We do see the break. That means we following up for that market to push up further. It may come back down to retest to push up further. But if that market's come back to retest, watch it, because if that market identifies something else in that area above the fourth to last candle, it can still drop that market. So it'll look something like this: first, second, third, and the market come back down, or it could do a triple top, another double top within that area of consolidation before dropping back down. And it may not drop down all the way back down to lower lows of the beginning of the 12-month time frame, but it can come back to fully retest the top of that zone, nearing the numbers of 22,909.69. Walking down to the 4-hour time frame, reading as a bearish red candle, spiked down to low slash doji cross. So market's consolidating. So price second, third, fourth to last candle in the market, all consolidation, waiting for the breakout of that fourth to last candle in the market for that market to push in that direction. So we're looking for the breakout to the fourth to last candle body. Anything within that area is consolidation. And as we can see, the market's trying to form a pattern, but did spike that high multiple times for 1, 2, maybe 3, and then we got a retest. So we're looking for the breakout of the zone on the 4-hour time frame, headed down to the 3. A little more detailed. Candles is more detailed. Very important information. Please study Forex pattern cheat sheet. Breakout and retest strategies. Okay, guys, this is Cam Jones.